Austrian insurance companies were one of the first players who were building sustainable bridges between the insurance markets of Eastern and Western Europe. Nowadays, our insurance companies, we're really proud of them, consider not only Austria but the entire region as their home market. Austrian insurance companies are among the biggest long-term investors in the region and employ around 40,000 people in this area. So this is really, for such a, to be honest, Austria is a small country, but the insurance market of the Austrian insurance sector is the whole region. And for instance, I look here at Dieter, Vienna Insurance Group, for instance, is a really big player in this area. Ladies and gentlemen, today we don't talk about Austria and Austrian insurance companies. No, we talk about consumer protection and discuss already what are the aims and the goals of the insurance industry. What is insurance industry and consumer protection? What is the relation of that? And I would say it's all about trust and all about fulfilling consumer needs. And I can show you that this was insurance companies do every day. Insurance companies are in a close contact with consumers and have to do everything to satisfy their needs for being successful on the market. As our business is long-term oriented, we all know that, it's even more the essential interest of insurance companies to give a good long-term relation with its customers. This is the reason for us, and its utmost importance, to invest in trust in order to be successful. This trust again is built on financial stability on the one side, and how we behave in the conduct of business. Two poles, I would say, financial stability and the conduct of business. And when we talk about financial, I'm sorry, I have to talk again about Austria, but when we are talking about financial stability in the insurance market, I have to say that many of the Austrian insurance companies are very old. The oldest insurance company in Austria, it's a small mutual company, but it's older than 300 years. So this shows that these companies obviously were able to manage risks of their clients and themselves quite well. The last event of insolvency goes back in the 1930s and was of certain extent rather a criminal act than a consequence of mismanagement. Since then, companies have always kept their promises, also during the financial crisis. Insurance companies were a factor of stability. But, to be honest, how can I say? You should repair the roof when the sun is shining. What will I say? Solvency II, Karel van Hülle here in the room knows about everything about Solvency II. Solvency II has a lot of possibilities to provide for recovery measures, for instance, like reverse stress tests or the ORSA and other things. Now in 2017, only the second year of Solvency II, we call on the European institution to see whether Solvency II is really fully implemented and applied across all member states, in particular the recovery measures. When it comes to resolution, existing powers, such as the power to transfer the portfolio to an insurer, are appropriate for dealing with insurers in financial distress. We have these powers in Austria already since years, but fortunately we never needed it. But it is already implemented in the Austrian Supervisory Act. It seems important to highlight that in contrast to banking, the resolution of an insurer doesn't occur overnight. We don't have a bank run in the insurance industry. It's a completely different business. There is no need to rush into resolution very quickly. And therefore resolution should only be triggered after an appropriate period of observation in order to ensure that the financial distress is sustainable. As I said before, and we always mention it, it's one of our general saying for our association, insurance business fundamentally differs from the one of banks. It's a completely different business. Our business is long-term oriented, risk-averse. Elliott Erwin has a strong principle of solidarity. So it's unambitious that we need tailor-made insurance regulation and a sophisticated insurance supervision. This is very important for us because many rumors go around to merge all the supervisory authorities and so on. But I have to stress it again, we need insurance supervision. And insurance supervision shall happen where the business takes place. 95% of the gross written premiums in Europe are national business. Shouldn't forget, 95% are national business. Only 5% were written where freedom of service or freedom of establishment. Therefore, we support a strong local supervision that is close possible to the market. However, we have European rules, and we very much welcome EIOPA's efforts to provide for a coherent supervisory culture. We encourage EIOPA to continue its efforts for a coherent application of European insurance law across all member states, particularly in the area of freedom of product design and pricing. Back to Solvency II. Yes, it's an important tool to assure financial healthy companies being able to keep their long-term promises for consumers. What else can I say? Karel van Hülle is here, of course. And to say it works well after 2 years experience. But of course, there's another thing when you talk about Solvency II. That has a sound relation between regulatory efforts of the companies and added value for stability and consumers. We should be aware that regulation is perceived among the top 3 operational risks for insurance companies. So well-balanced regulation with a clear set of common rules is necessary, no doubt about this. But nevertheless, we should be aware of negative consequences of regulative burden, also in the interest of consumers. To be honest, regulation is expensive, also for the insurance companies. And at the end, it's the consumer who pays at the end. But we're not now at the end. But it's true, at the end, premiums will rise because money doesn't grow at the end. Yes, I can assure there's another problem with regulation. It's a very lot to do in the companies, and it's very intense to fulfill all the requirements. And I can assure you that the industry does everything possible to comply in the best way to new rules. Unfortunately, this is not always made easy for them, particularly when it comes to unrealistic short-time implementing deadlines. We need the final legislative texts much earlier. These are the only sources companies can rely on. They can only start an efficient implementation process when they can be sure what rules they have to follow. This is why it was absolutely necessary to postpone the PRIPS implementation. But I look for the foreseeable implementation process of the IDD, and yes, what can I say? It's very clear that we end up in a similar situation like in PRIPS. And I can only speak again for Austria, but I guess it's yesterday I had some discussions with my colleagues, and I heard it's in some countries the same situation like here. We expect the final text that companies have to implement, IDD, by the end of autumn 2017. Autumn 2017. I already have to say at this point, this is not enough time for implementation. And in comparison to PRIPS, IDD is much, much more complex. You have to change your whole process with the intermediaries. And you can do this overnight. This is impossible. You should say now this is the problem of insurance companies. Yeah, of course it's a problem of the insurance companies. Yes, it is their problem. But it is also a question of legal certainty and a question of consumers, because if you have not the right regulation in your company and the right implementation, it will make problem for you, but also for the consumer. So I see really hard times coming for the insurance companies. And this leads me to a general reflection. From the experience of the last years, we see that the implementation time of 2 years of a directive does not seem to be enough. We observed that from 2 years implementation time, 75% of the time is consumed by level 2 and level 3 measures. I fully understand that the European and national legislator is bound by complex internal processes itself. It's okay. Also for EIOPA, it's okay. You have to take time to find the right wording, to discuss it with your colleagues, and it's also okay that the Commission needs time and the Parliament. Yes, it takes time because all the regulatory measures are very complex and you have to find the right wording. But 75% of this 2-year period is lost for national authorities to transpose it in national law and for the industry to implement it. And this is, of course, not very satisfying. And you can say speed kills. You make mistakes when you're too quick in your implementation. So I hope we definitely have to find a solution for the future. Now it's maybe too late, but now we see that the Lamfalussy procedure is probably not really working very well because we have, as I mentioned before, too less time for this complex material. But I already mentioned the IDD, and let me change now to the field of distribution and conduct of business as the second pillar. Financial stability, regulation on the one side of our trust, and the other pillar is how we behave in the conduct of business and how we manage the distribution process. Concerning information requirements to the consumer, we are caught in the dilemma of providing not enough information versus an information overflow. That's a fact. And there's a very interesting study. More information requirements do not automatically result in better consumer protection. That's clear. In contrast, an overload of information cannot be managed and understood by the consumer. And this is shown as in the mentioned study of the University of St. Gallen. They made a study, it's for Switzerland, not for the EU, but I think the people in Switzerland are even, I don't care, maybe they have a good relation to the finance industry and they're interested in, maybe it's kind of prejudice, but they're interested in financial issues. But that's not true, they're not interested. They have no idea of financial products. And I think it's the same situation in Austria and probably the same situation in your countries. So it makes not really sense to give that huge amount of information material to consumers. They don't read it, and if they read it, they don't understand it. And why they don't understand it? That's the end of my speech. But here we should really think about it if this is the right way to give this huge amount of information to the consumer. On the other hand, too little information is also risky, of course. Insurance products are complex, that's true. But we have, between these two extremes, we have to find a good balance. And this balance is, of course, in the interest of insurers as well, the consumers. And let me illustrate this dilemma with a practical example. Although we see the added value of a harmonized key information document. Key information document sounds good. And also the IPID is better. I think IPID is much better than the key ID. But we have to point out that the implementation does not meet the mentioned right balance, because I'm not sure if the key ID is really helpful for the consumers. Well, I'm sure it's not helpful, but it's too complex. The idea is good to see on the first side what kind of product is this, what is the benefit, what I have to pay, and so on. Yes, but it's much too complex for the consumer and much too complex for the insurance industry. So the current drafts still have to be improved. Well, let's see. Discussion is going on to be a real value for consumer. And when we talk about PRIPS and life insurance and so on, I will speak now about another important issue for the insurance industry and for our society. The insurance industry plays an important role in our pension systems. We expect this role to increase in order to solve challenges for our societies resulting from demographic developments and so on. We all know this. Insurance Europe published last week the pension blueprint, so this is really one of the most important topics we have as insurance industry and for our society. But what is the problem with the pensions? The problem with the pension is it's very easy to say. It's very easy. It's all about the situation. My money is gone, but I'm still there. So that's maybe very. We all want to live long, of course. We want to live long, obviously, but it would be very helpful if we have money at the end of our life. Rest, some pieces rest. But what is a pension? I said before. But appropriate cover for biometric risk in personal pensions is an important aspect of the fight against poverty and insecurity among elderly people. When setting up a pan-European pension product, the European institution should include the coverage of the longevity risks, as well as a provision for surviving dependents. A lifelong income is more than a nice to have. It is a must-have for a pan-European pension. And to say it clear, a pension product is no high-risk investment product. No, it is not. It's not a high-risk investment product with high profit. Yes, high profit is nice, but high profit is always in connection with high risk. A pension product, in our sense, is a long-term investment with a high degree of lifelong security. It's an insurance product. It's of course, for us as a proponent of the Austrian insurance industry, but I think it's obvious for all that you need guarantees also when you're retired. Yes, and coming to the end now, I mentioned the consumers, they have no ideas, no clue about financial industry, financial products. For the insurance industry, it's of course of utmost importance to be in a relationship with consumers who understand risks and information about insurance products. So it makes no sense to give them a phone book of information about insurance contract law and all the calculations. It makes no sense. They don't understand it. So it's very important that our customers understand the risk, their situation, and they understand also the information we give to them. As a matter of fact, a huge potential for a better awareness in the field of consumer protection is financial education. In this field, I see a need for much more initiatives, and I speak about our association. We are doing financial education since years, but yes, you can do something, but it's only bits and pieces. And you for instance, we developed together with teachers a board game called Less Risk, More Fun, which is used in Austrian school. It's about understand risk, where is the risk, how can I avoid risks. It's not really information about insurance products. Yes, at the end there's the insurance product, but the starting point is where is the risk and how can I manage the risk. This is very interesting because many people have no idea. They say, believe state should pay, I have an accident, no problem. I have this and this problems, the state should pay. Yes, of course. In some aspects the state pays, but the question is how long can the state afford this? And so we have to talk about at the end of insurance solutions. Then we elaborated brochures for consumers giving an overview of different insurance products. We support the establishment of a financial museum for children, and every year we work together with our consumer protection organization and publish a brochure about certain fields of prevention in household, children, security, and so on. So we do a lot, but of course it's not enough because you have to go to school. It must be in the curriculum of our schools and so on. So it's a lot to be done to gain and have a positive result in financial education. And of course, it takes years that you see a result, but we have to start. And to mention the board game, Less Risk, More Fun. For instance, it's also published in Macedonia and Croatia, and we see the entire region. Great enthusiasm and the positive intentions to be active in this field. In this context, we will work together, and maybe we can publish or export our game to other countries. Let me conclude by once more emphasizing that all stakeholders are in the same boat when it comes to assure consumer protection. This is why we all have to be in a close dialogue and openly discuss our experiences and suggestions for improvement. This conference is, of course, an important step in the right direction, particularly as it is an excellent opportunity to take the Central Eastern and Southeastern perspective into consideration and therefore contribute to a strong, successful, diverse and healthy, balanced European insurance market. Thank you again for joining us in Vienna, and I wish you a very constructive discussion and a very successful conference today. Thank you.